Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, June 24th, 2022. So, another week is in the books. Quite a large weekly candle there. Nice little gap up, nice little close. In this video, what I'd like to do is kind of go back to last week's video and kind of just walk through a couple of the points that we walked through in terms of things that we would look for to see if the bulls could actually do something in the short term. The thing is, the market was so deeply oversold in the short term that we were looking for clues as to what the bulls might be able to do, if anything at all, right? And if they weren't able to accomplish these things, then the market was probably going to fall out of bed. But at least so far, they have accomplished these things. And at least so far, they have also closed a gap here that was on the SPY chart right about there. Right, you see the open gap. So if you're keen, you might say, well, there's another open gap right here. And I would tend to agree with you. So the same things that we covered last week, in order to fill the first gap, will be required to fill the second gap. So let's kind of dive right on in here, and we might even have a pick or two for you this week too. So notice here on SPY that you had this low, and then you went on to make a lower low here. This is going to be important going forward because remember that a lot of the clues last week were not coming actually from the indices themselves. They were coming from the peripheral parts of the market, like HYG. Now, HYG is kind of at the bottom of the barrel in terms of what we want to be buying. We never want to be buying this. But as a indicator, if you will, of market sentiment, notice how this did not have the lower low that SPY did. Right? You see that higher low right there? That's what took us into the weekend. And they're like, okay. HYG is telling us something that SPY is not agreeing with, right? HYG is making a higher low, SPY is making a lower low. Which one's telling the truth? If you ever find yourself in that spot, always trust HYG, right? It's pretty easy to manipulate the SPY. It's not that easy to manipulate the bond market. So the HYG was giving us the clue, and what I said for you to look for was for it to hold on an hourly time frame, which is right over here, and continue to make higher lows and higher highs. So low, 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 high, and high, right? So you need to see the stair step process. So now the next low that I would give you is 74. So that makes it very simple. What I would do here is actually leave an alert on your chart so you don't even have to watch this thing at 74. As long as it holds above 74, there's no problems. You can continue to see an oversold bounce back to about 395 to 400 on SPY. But if this gets back below 74, throw everything in the bin and get you some puts because this would be going lower. But at least so far going into next week, it looks correct. So there was also another clue, right? So in this case, since we used HYG, let's use it again. Here's a low. Here's a lower low. If you then pull up something that's universally considered garbage, ARC, notice it doesn't have that pattern. So notice that ARC here has a low here and a higher low here. Right? See it? So ARC was already trying to bottom, essentially. Why would ARC, the worst product in the market, try to bottom if the market's not going to do something positive? Just something to consider. Also, ARC had this intermediate term low, and then it had the higher low, just like HYG, whereas on the SPY made a low, and then it made a lower low, right? So you're already getting a couple clues here that things might not be what they seem. So there's still juice here in all of these products. The reason there's juice, I'll go back to the SPY, juice meaning room to the upside, is because you're so far away from the weekly mean that even just mean reversion on a weekly time frame would be massive, right? And definitely worth your time playing as long as you do it smart. So the next level that I'm looking at here on the SPY is going to be this hourly 200. Right? Now notice that I just highlighted this hourly 200. Notice that price is below it, right? What's leading the market right now and why? The QQQ is leading the market. Why is that? Because the inflation expectations have topped out. in the short term, right? They might come back, but in the short term, the idea that we're going into a recession and that inflation and therefore, well, inflation is not going to be as high as people think, not for good reasons, but because we're going into a recession, then that rotates the market away from the inflation trade, which is energy and materials, industrials, and banks, and it rotates back to tech. So I just showed you the SPY on an hourly time frame, and notice here that on the QQQ, it's above its 200, right? So next week you can track the QQQ as a leadership proxy, but what I expect is that every market, the SPY and maybe even the IWM, although less confident about that, but pretty confident about the SPY, will be able to at least come up and test its hourly 200. And on the SPY, I think that's right around 394, 395. So that would imply a little bit more upside as well. Also, you're just very oversold, and you don't have any interim sell signals. So getting mean reversion here makes a lot of sense. So let's go back to the SPY for a second. And keep in mind, even if you're bearish, this is the best thing that could happen for you, right? Now, hopefully you were correctly positioned for this, because if you're bearish and you're incorrectly positioned, you're going to say, that's not worth a hill of beans to me, Sam. Today sucked. But if you're bearish and you were correctly positioned, it would actually be okay, because what you want to see here, the most bearish thing that could happen is for this thing to bounce back into the meat of where you want to short, right? You see that circle I'm drawing in? You want to typically short downtrends between the 21 and the 8, right? So anywhere in this little happy zone is where you want to get short. And notice that we're not even there yet, right? So we wouldn't even get there until closer to about, let's just call it 396, 400. Let's just call it 400. Let's just kind of be a little liberal with it, right? So that's kind of where you would begin to look for a short, right? With the closer that you can get it to the weekly 21, the better. So this bounce here, it's definitely short covering. It was without question short covering. Welcome it. Welcome it if you're bullish, because you need this. Welcome it if you're bearish, because it's giving you way better opportunities to short at way better prices. You don't want to be shorting down here 3 ATR, right? That's not what you want to do. You can't make a career doing that. But if it bounces back into the happy medium zone between the 8 and 21 weekly, that's where you could then open up the shorts. So just kind of a little bit of a refresher from last week in terms of how I'm looking at things. In terms of the big picture that I shared with you guys last week, nothing has changed, right? Great week, great day. We were all on the right side of it on the room, so we welcome it. But in terms of like the big picture stuff that I shared with you last week, nothing has changed so far. Right? If something changes, I will definitely let you know. But a 3% bounce here doesn't change a thing. Honestly, even if this bounces to 400 or even, let's say 405, it doesn't change a thing. So we'll keep an eye on it, but just be aware of what you're going to be looking for next week. And it's going to be more of the same. You're going to be looking for more leadership from tech. You're going to be looking for HYG to hold above 74, ideally higher. And then those are going to be clues that the bulls will still have a little bit more room to run. The moment that you start to see weakness in tech or in HYG, go flat or short. But for now, it's play ball. So I was going to share a pick with you guys. Let's do this. I'll share an easy one, and then I'll share a more difficult one, and you can let your heart decide. So Google's a little bit tough here because I know it's up 100, but this has been leading, and it's still leading, and it's really kind of taking the cake here in terms of how much it's leading. The target here lines up at 2450. Symmetry as well as the weekly 200, or excuse me, the weekly 21. So from a leadership point of view, you want to find things that are doing way better than the index. And this looks not only better than the Qs, this looks better than almost every mega cap tech stock I could find, right? So there's still room here. The symmetrical target is 2450, and this is more of the easy one. Now again, you want to be judicious with your entries. You want to get it closer to support, of course, but just be aware Google is the leadership for now inside the market. In terms of the mega cap tech. And then here's an idea that I shared in the gold room. This one's a little bit more of a big picture idea, right? I don't expect this one to be as easy as Google, but I'll show you why I'm looking at it. And this one's really more of a nod to those of you guys that like to trade longer term, right? So while Google might be a good trade for the next week or two, this one's really setting up for a big trade longer term. So it's going to be EMPH, and I'll show you the signal. So again, this is a little bit less of a trade, although I did buy some today. It was on sale as far as I was concerned. But here's the signal. The signal is right here. So EMPH is solar. In my opinion, it's the best looking solar chart on the planet. And this little green arrow right here is the key to everything, because you can see here that you went you went 100 ATR to the upside, but you see how it flags away. The ATR is this magenta, and it has a hard time getting above that consistently. You see how you flag away from the ATR, and now the ATR is way up there at 330. See it? So now there's a lot of room here, right? Before it was always pressed against, it was always very, very suspect all through here. But now you see how you have all this room before you would even come back to test the ATR. That's what you want, right? So that's step number one. Step number two is the fact that it's holding the 21 on a closing basis. Step number three is that you're now in a monthly squeeze. Step number four is that your trend oscillator is still fine. And then the big one here, the big tiebreaker, the big signal for me, that little green arrow. A monthly mid-level buy on a weekly squeeze with structured EMAs and a ton of room to go back to the 3 ATR. I like that. So keep an EMPH in your back pocket, and keep solar in your back pocket, because there might be a theme that starts to set up, and we'll cover it a little bit more as it starts to develop. It's still very early in the game for the solar theme, but I do want to bring it to put it on your radar. This is the best one. If you find a better one, drop it down in the chat below. And if you find something that looks better than this and you put it in the chat, I'll make sure to send you a copy of Mastering the Trade. So a little bit of an incentive for you to go on a hunt. I don't expect any of you to win, so it is a little bit of a carnival trick that I'm pulling on you, because it's a little bit of a rigged game. I've already looked at all of them. There's nothing that looks better than this, and that's why if you can find something, a solar stock that looks better than this, and you drop in the chat, and I can confirm it looks better, we'll get your contact info, and we'll send you out a copy of John Carter's Mastering the Trade. But happy hunting, right? It can't hurt to hunt around. And guess what? If you don't want to hunt around, you just want to use my work, perfectly fine. We've already done the work for you. EMPH is the trade. So a little bit of Google in the short term, a little bit of solar in the long term. Know your levels on the SPY. Understand what's going on. Don't fall in love with the thing, right? Remember, this is a trader's market. Don't get married to anything. In the same way that it goes up 10, it can go down 10. But at least for now, going into next week, as long as HYG holds 74, as long as ARC and Tech continue to lead, the bulls have a little bit of room here. Maybe to even test a little bit above 400 on SPY. So that's my time, guys. Appreciate you guys leaving comments, leaving likes. Really does help us with the algorithm. We can already see that the Google gods are blessing us a little bit more than they have. So if you don't mind, go ahead and leave us another like on this video, leave us a comment, and drop any solar stocks you may think are better than EMPH in the chat, and see if you can win a book. All right, guys, thanks for checking us out. See you next week. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.